It is Tuesday, February 10th, 2026, and silver has just been destroyed. From $108 to $79, $29 gone in 48 hours. 27% erased, as if it never existed. The charts look like someone pulled a trap door. And if you think this was a real market doing real things, I need to show you something. Because while silver was being destroyed on your screen, something extraordinary was happening in the real world. Industrial manufacturers in Germany, Japan, and South Korea began rationing silver allocations to their production lines. Solar panel factories in China reduced output, not because demand fell, but because silver supply ran short. Medical device manufacturers in the United States put silver-dependent components on 6-week lead times. This is not a market that has too much silver. This is a market that is running out. Price down 27%, physical supply vanishing. These two facts cannot both be true in a fair market. Something is deeply broken. Welcome to the hidden economy. I'm going to show you exactly what is broken and why it matters more than anything else in your financial life right now. Let us start with the industrial side, because most people who watch silver focus entirely on investment demand. That is a mistake. It means they miss 60% of the story. Silver is not just a precious metal, it is the most electrically conductive element on Earth. It cannot be substituted in solar cells, EV components, 5G infrastructure, or medical equipment. When manufacturers need silver, they need silver. Period. Right now, the Silver Institute's latest data shows industrial demand for silver running 23% above their projections for this year. The solar industry alone consumed 210 million ounces last year. That number is accelerating. Meanwhile, global silver mine production has been flat or declining since 2016. The world is consuming silver faster than it can mine it. Has been for 5 consecutive years. The cumulative deficit over those 5 years is approaching 900 million ounces. That is nearly a full year of global mine production that has been consumed from above-ground stockpiles. Those stockpiles are now critically depleted. Now add the paper market crash on top of this fundamental shortage. The paper price drops $29 and suddenly the entire world wants to buy silver. Industrial buyers accelerate purchases to lock in lower costs. Investment buyers see a sale. Central banks see an opportunity. All of this demand hits a market that is already stretched to breaking point. The result is not lower prices clearing inventory. The result is empty shelves at any price. Let me show you what happened at the industrial level this week. Samsung SDI, one of the world's largest battery manufacturers, put out a quiet notice to their suppliers on Monday morning. The notice stated that silver paste allocations for Q1 production would be reduced by 18% due to supply constraints. Not price concerns, supply constraints. They cannot get the silver they need. Hanwha Solutions, Korea's largest solar manufacturer, issued a similar notice. First Solar in the United States suspended new module contracts for April delivery, citing silver component uncertainty. These are not small companies having inventory hiccups. These are titans of the green energy industry, and they cannot secure silver at any price. The industrial market is breaking. Now let me take you to Mexico. Mexico is the world's largest silver producer, responsible for nearly 25% of global mine supply. What happens in Mexican silver mines determines what happens to global supply. This week, the Fresnillo Mining Group, the world's largest primary silver producer, announced a force majeure on several contracts. Force majeure means they cannot deliver what they promised. Fresnillo cited a combination of factors: lower ore grades in aging mines, regulatory delays in new mine permitting, and water shortages affecting processing capacity. This is not a one-quarter problem. This is a structural, multi-year decline. When the world's largest silver miner declares force majeure while the paper price is crashing, you are witnessing 2 completely separate realities operating simultaneously. Paper reality and physical reality have split apart. Now, I need to talk about the green energy paradox, because it is central to understanding why this crisis is different from anything that came before. Governments around the world have committed trillions of dollars to transitioning away from fossil fuels. Solar panels, electric vehicles, wind turbines, smart grids, all of it requires silver, enormous amounts of silver. The International Energy Agency projects that the clean energy transition will require 50% more silver than current production by 2030. That is in 4 years, and current production is already insufficient for current demand. The transition? The world is betting its future on is being built on a foundation of a metal that is running out. And the paper market is crashing the price of that metal at the exact moment it has never been more essential. Think about what that means. Lower paper prices make silver mining less profitable. Less profitable mining means less investment in new mines. Less investment means future supply falls further. The crash is guaranteeing tomorrow's shortage will be worse than today's. This is a doom loop. And nobody in mainstream financial media is connecting these dots. Let me show you the COMEX warehouse data because the numbers are genuinely alarming. COMEX registered silver, the metal actually available for delivery against futures contracts, stands at 98 million ounces. That sounds like a lot until you consider that open interest on COMEX silver futures represents the equivalent of over 40 billion ounces of silver. The ratio of paper promises to physical metal is more than 400 to 1. If just 1/4% of paper holders demanded physical delivery, COMEX would default. The entire paper pricing system would collapse overnight, and the entities who understand this are quietly positioning on the right side of that trade. Russia added to gold reserves this week, but their silver movements are the more interesting story. Russian sovereign wealth fund positions in physical silver through intermediaries in the UAE have increased dramatically. They are not buying paper, they are buying metal. Turkey has been systematically converting dollar reserves into precious metals for 18 months. Their central bank is not buying COMEX futures. They are taking physical delivery and shipping it to Ankara. These governments have teams of economists who understand the monetary system better than anyone. When they exit paper and move to physical, they are voting with the hardest currency they have on what comes next. Now let me address the retail side because millions of individual investors are being hurt by this crash right now. They see the price fall and they panic. They sell physical silver to lock in losses. This is exactly what the paper sellers want. Every ounce of physical silver that a panicked retail investor sells gets absorbed by a patient institutional buyer who understands what it is actually worth. Wealth is being transferred right now, in real time, from emotional sellers to patient accumulators. Do not be the one transferring your wealth. Understand the game well enough to stay in it. The lease rate data confirms everything I'm telling you. Silver lease rates have exploded to 28% in some markets. 28% to borrow physical silver for a short period. That is a number so extreme it should be headline news everywhere. High lease rates mean holders of physical silver are demanding enormous compensation to lend it because they know how scarce real metal is. They know the paper market is disconnected from reality. They know their silver is worth far more than the paper price claims. Now, let me tell you what fair would look like. A fair market would have price and physical supply moving in the same direction. Price falls, supply increases. Price rises, supply tightens. That is how markets are supposed to work. What we have is the opposite. Price is falling while supply vanishes. Price signals and physical reality are moving apart. This is not a fair market. This is a controlled demolition of price to allow accumulation at artificially low levels. The question you should be asking is not why is silver falling? The question is who benefits from silver falling at this exact moment, and is that entity positioned to profit enormously when paper and physical prices realign? The answer to that question would change the way you think about every financial market you participate in. For now, here is what you need to know practically. Hold your physical silver. The paper price is noise. The premium you would pay for physical silver right now, in some markets 45% above paper price, is the real signal. If you want to buy physical and accept that you will pay well above the paper price. That premium is not a rip-off. That premium is the market telling you the truth, that the paper price is hiding. Silver has been destroyed on paper this week, but the silver you can hold in your hands has never been more valuable or harder to find. Those two facts are not in conflict. They are the same story told from two different angles. They destroyed silver on paper. The real world is running out. Subscribe, share this video, and drop a comment. Do you think the industrial demand crisis or the monetary crisis will force the paper physical reset first?